Ladies and gentlemen, good day and welcome to PN Gadgil Jewellers Q2FY25 earnings conference call. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Naveen Trivedi from Motilal Oswal Financial Services. Thank you, and over to you, sir.
Yeah, hi, good morning, everyone. On behalf of Motilal Oswal, I am Naveen Trivedi. Would like to welcome you all to the PN Gadgil Jewellers Q2FY25 earnings conference call. From the management today, we have Mr. Saurabh Gadgil, Chairman and Managing Director, Mr. Kiran Firodia, Executive Director and Group CFO. Since it is the first conference call after IPO, I would request management to give some background and introduction about the company and their future plans. I hand over the call to the management for the opening remarks. Over to you, Saurabh and Kiran.
Thank you, Naveen, and good morning, everyone. Like Naveen said, it's our first conference call, so we start with a brief on the company. PNG Jewellers draws its legacy from 1832, from the city of Sangli. That's where the company started from. 1958, the company further expanded to city of Pune, and then from there, it's been a journey all over Maharashtra. Today, PNG Jewellers is one of the oldest legacy brands in the country, having more than 6 generations of family members. Today, having more than 3 generations of karigars with them, having more than 30-40 lakh of dedicated loyal customers. Along with that, today, PNG Jewellers is, as of September 30th, present in 39 cities in Maharashtra and Goa, out of which 28 are company-owned stores, company-operated stores, and 11 are franchisee, which is a FOCO model. PNG, as of September, had a top line of around 3,600 crores, with a EBIT of around 130 crores and a PAT of around 70 crores. PNG draws its legacy from a deep understanding of the jewelry market. It's a unique example of a organized family jeweler, when on one side it functions like a family jeweler when it comes to customer flexibility, customer orders, being like a family doctor to a jeweler, and at the same time, it's a very strong process-driven, system-driven organization. We have a lot of highlights when it comes to the peers, which our CFO Kiran will touch upon, and we are so poised on a fast growth track. Post IPO listing on September 17, in the month of October during Navratri, 9 days the company started 9 stores, which itself was a big feat. And today the store tally is at 48 stores. Going ahead, the company has plans to further expand in the state of Maharashtra. And the IPO goal was to be the largest player in terms of number of stores in Maharashtra. Today we are at number 2, and the plan in next year is to be the number 1 player in Maharashtra, both in terms of number of stores and in terms of the top line and the business. So now I'll pass the mic over to Kiran to talk a bit on the financials and our USPs compared to the market peers.
Good morning, everyone. This is Kiran Firodia from PNG Jewellers. In continuation with what our Managing Director, Dr. Saurabh Gadgil, just now informed you about the company and whatever we have demonstrated post-IPO. The results are now with us, and we have demonstrated the revenue growth of almost 40% on year-on-year basis, as well as we have demonstrated the EBITDA margin also increment by 41.92%, and that is straightway increment in the PAT also by 59.28%. At the same time, there is improvement in the cost of goods sold. That is also by 0.5% we have improvised as compared to last H1. This is the same strategy what we have committed to all our investors during their roadshow and IPO journey. That is what exactly we have demonstrated. As far as object clause of our IPO is concerned, we are keen on utilizing the funds for expansion purpose, as there is no investor that time also, and today the end utilization of funds, we are committed to open 9 stores by March 25, which I think Dr. Saurabh just mentioned that we have delivered in less than 30 days. At the same time, we have discussed also that we will restructure the bank borrowing so that there will be reduction in the finance cost. So we have successfully completed our IPO on 17th of September, and that is hardly just 2 weeks closure to the Q2. But having said that, we have utilized the funds to swap the existing bank facility. Now restructuring will be in the pipeline, and that definitely we will update to you once that has been restored. So there are the object clause. The status of the object clause is that we have opened the 9th store. That is the commitment for March 25, and utilization of the funds for restructuring of the bank borrowing. That entire debt has been reduced drastically, and restructuring is in the pipeline. So this is with respect to the commitment which we are giving at the time of IPO, as well as the current financial status.
And gentlemen, just to continue ahead, when it comes to revenue per store, when it comes to revenue per square feet, we have the best performance in the industry. Our revenue per square feet is upward of 6 lakh rupees a square feet. Our revenue per store is upward of already 95 crores for the half year ended September. Our ROCE, ROE both are attractive. Our growth for the last 3-4 years combined CAGR has been upward of 40%. When it comes to employees, when it comes to longevity, we see a very low labor turnover. Our company is known for its strong bonding along with its customers, with its carriers, and also with its employees. We have one of a unique model where almost 30% of our entire sales come from made-to-order business, and this helps us to work with lean capital as compared to the competition. So my store investment in capex and opex is almost 40-45% lower than compared to the market, and this gives us higher stock turns than the industry. Our stock turns today would be upward of 5 on a company level, and along with this is a strong understanding of the jewelry market. Being in the market for almost 20 decades, understanding customer collections, understanding customer needs is what the company takes pride in. We have Madhuri Dixit has been the brand ambassador for the brand for the last 10 plus years, and this is a very successful association. I can also proudly say that the company enjoys a very strong footfall to conversion ratio. Out of 100 footfalls, more than 93% are converted into actual customers. So this gives us a very high conversion ratio, and thus enables us to work with medium-sized store as compared to competition. And these medium-sized store gives us an edge when it comes to operating costs and when it comes to having high turnover of stocks. So the company is today professionally managed. Our CFO, Mr. Kiran Firodia, has been a veteran, more than 25 years in the industry. Along with this, our purchase team, sales team, HR, marketing, e-com, all are professionals, each with the company for almost 10 years, and cumulatively each have experience of more than 20-25 years individually. So it's a very strong professional management team. We are a great place to work for the last 3 years in a row. We are a great place to work in retail category pan-India. We are in the top 10 for the last year. So the company is focused on growth. The company is focused on delivering its result, focused on efficiency, and the IPO has helped the company to reach a different platform with more resources and at a bigger playing field to further fuel his dream and achieve further growth. Thank you, Naveen.
So we'll start the question and answer session.
Sure.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Samantha from HS Securities. Please go ahead.
Yeah, hi sir. Thanks for providing the opportunity. So basically on the cut of the custom duty, what is the impact of that in our inventory?
Yeah, thank you for the question. This is Kiran Firodia. The custom duty impact, which has been, on the 22nd of July, Government of India has decided to cut down the duty, and basis of that and the impact of the reduction in the custom duty is 18.5 crore reduction in the profit.
Okay, so is this only for this quarter or will it be carried in the next quarter also?
No, this has been done in the same quarter only, that is in Q2. At the same time, we have done the replenishment model aggressively. But if you say the cumulative effect, then there will be only 3.31 crore is the net impact. But purely, if you are asking me what is exactly the impact of custom duty on reduction of the duty, then it is 18.55 crore.
Okay, and as you said, like, are we planning to expand outside Maharashtra also, or like we are looking for the market leader in Maharashtra and then we are looking for expansion plan?
Yeah, this is Saurabh. So to answer your question, the first phase is to be the leader in Maharashtra. So we are close to that. We had said that we want to be around a 55 to 60 store company in Maharashtra. Today, as we speak, we are a 48 store company. We'll be adding another 5 to 6 stores in Q3 and Q4. So that will take the tally to close to 55. And then in the financial FY25-26, we'll be further adding another 10 more stores in Maharashtra. And post that, we'll be looking at expanding in the neighboring states. As we have mentioned time and again, that we would want to follow the Peshwa route. And by that I mean post Maharashtra, we'll be looking at Madhya Pradesh, Chhattisgarh, Bihar, UP as the states will further expand.
Okay, and what was the stud ratio for this quarter?
So stud ratio for the quarter was around 11%.
Okay, and what we are targeting for the whole FY25?
So I think FY25 will be at I think around 11% only because there's been a diamond and studded as a category was new to PNG, started only around 6 years back, which has shown very good growth. So I think we are targeting in the next 2 years to reach the target of 15% for studded.
Okay, thank you. I will get back in the queue.
Thank you. The next question is from the line of Pranav from Pink Wealth Advisors. Please go ahead.
Hello.
Yes, sir, you're audible.
Yeah. My question is, sir, in the press release you have given branch-wise profitability. So what is that branch-wise basically?
So basically, as a company, we have by 30th September, we have 39 stores, and we have, as a policy, we are keeping track on per branch. So we are keeping track of, so there will be allocation of expenses properly, cost center wise so each store is a profit center, so we are allocating cost as per the branch and we are keeping track on that. So basis on that, we are coming with the branch wise profitability. With respect to overhead, they are basis on revenue, they are basis on the inventory, they are basis on the manpower. So accordingly, that revenue will split up. So we are coming up with that, and then the figure comes to branch wise profitability.
So is it similar to revenue, like revenue per profit? Sorry, per store profit?
No. That is categorically we are doing it per store wise. And when we are talking about in general, then whatever is my total profit, that is straightway utilize my number of store as a denominator to arrive at the per store profitability.
Okay. And sir, the revenue per store, which we have seen, uptake in the H1 FY25, since we have opened 9 new stores. So do we see that further this revenue per store, we're gonna see a uptick?
See, to be honest with you, the same thing we also elaborate in our IPO roadshow also. Whenever we are opening new store, there is a timeline which requires to achieve to particular inventory level. So first target when we open a new store is to reach to break even. And as far as our historical data, which is successfully demonstrated for quite a few stores, we arrive at minimum 15 to 18 months required for each store to reach at break even, and then post that particular store is started contributing to the net profit kitty. So as far as new stores which we have opened in Q3, because these stores open post September.
Okay.
So these stores will be definitely profitable in a year's time because we have opened it before Diwali. So again, there is a crux in that. If you open the store before main festival, then chances are high that we can reach to break even in 12 to 15 months also.
And sir, any update like how has been the response? It is as per your expectation?
So the response for the stores has been as per expectation. Like we had said before, the stores are in Maharashtra. The stores are followed by a very diligent way of doing a market survey, doing exhibition in those cities, and then opening stores. So the response has been good, and being the festive season, being in the prime of the entire Dussehra Diwali period, the stores have shown very good performance, and we are happy with the way each store has picked up right from the inception.
And so we are seeing some, correction in gold prices. So if this trend continues, let's say for 1 quarter, so are we gonna see a inventory hit, like inventory loss in our books for the next quarter?
See, to answer that, post IPO, we had said that we'll be reducing the fund loans and convert to non-fund based limits to use for gold metal loans. So that is being done aggressively, and we should be, looking at hedging to a good extent in Q3. So, and along with our stock turn, which help us to plan our replacement very effectively, I don't see much impact, even if prices go down. And the other effect would be that if prices remain a little soft for this quarter, considering a number of weddings which are happening in the country, this should give a big boost to consumption, and which could further, enhance, the top line and the sales. So all in all, I think it would be a positive impact if prices remain low.
Okay, thank you, sir.
Thank you.
Thank you. The next question is from the line of Deepak Lalwani from Unifi Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. So my first question is on the festive demand. Can you just give a flavor of how the festive demand panned out for us and and on the industry in general?
So the festive demand has been good for us, considering that we had opened more stores and we are visible, along with our new 2 collection we had launched, with Madhuri Dixit, the diamond collection Ina and the gold collection Saptam. So the demand was strong. In terms of volumes, we would have grown around 7 to 8% over last Diwali, but in value we are up around 35 to 40%. Bullion had been strong continuously in the entire period, where it was seen to be primarily investment demand and the impact of gold sovereign bond being discontinued. Natural diamonds have remained strong, and there has been no impact of lab-grown diamonds on the sales, which have seen steady growth over last Diwali. All in all, if you look at it value-wise, we have seen a good Diwali, and almost all the stores have shown good performance. So I think overall it's been a good festive season.
Sure, that is good to hear. So this 35% value growth, does it include the new stores or the existing stores itself did 35% growth?
So if you consider new stores, the growth would be higher. What we're talking right now is apple to apple. So talking of the 39 to 38 stores before the opening of 9 stores. So the value growth is in apple to apple comparison.
So that's great to hear. And the new store economics, can you just share the revenue per store that we do, on a steady state basis, and how much are we at today for the new stores?
So new store, we are targeting to achieve 1.5 stock turn, and that we are targeting to reach by first quarter of 26.
Okay. So in revenue terms, what would that mean? 1.5 stock turns?
So typically it will reach to around 65 crores.
Okay.
Because when we are opening new store, that time we are putting the inventory of around 30 to 33 crores, which with considering the costing aspect, then it will reach to in the range of around 50 to 60.
Okay, sure.
The inventory level at our stores are a little lower than the competition, so that's why we work with more leaner inventory level, because almost 1/3 of my business comes from made to order business, which is completely customer advance based, and I don't need to have inventory for that. So that's why at our store, when they mature, we reach around 4 to 4.5 stock turn. For year one, we're looking at 1.5 stock turn. So that would be around 60-65 crores of top line.
Okay. And as they mature, what would be the revenue per store that we should pencil in?
So I think around 120 to 130 crores should be where we should be looking at once the store mature.
Sure. Got it, sir. And sir, on the OPEX run rate, today we are at an 80 crore run rate, 27 crores employee and other expenses of 54 crores. Since we have opened these new stores, our run rate will likely go up. So if you can indicate, what should one be budgeting in for this?
Yeah, I agree with you, because the moment we open the new store, then there will be definitely increment in the salary cost, increment in the other expenses, as well as increment in the marketing cost. But having said that, we are keeping the same momentum, and that is what we have demonstrated in our entire business plan also, that these stores will require minimum 1.5 stock ton to come at the break even. So our main target after opening the stores is to reach to a break even, so that the cost can be compensated.
Okay, got it. Okay, and sir, on the restructuring of that part, what is exactly pending? You said that you had a pipeline, so what is exactly pending, and by when should that be completed? And why, after we do this, what should be the hedging percentage that the company will sort of continue with?
Yeah, so that is really a good question. So in terms of restructuring, first is that we repay the entire term loan and working capital, and we have break the consortium, because the pre-IPO we are working in a consortium model wherein the State Bank is the leader in the consortium. Now the consortium has break, we have repaid the entire amount. Now the status is that we are really tied up in opening 9 stores, and Diwali festival being the primary festival of our industry, so we are concentrating on that festival. At the same time, we are in talking terms with all the existing bankers to release our security, so that they have completely released the charge also, so that modification charge is already in the pipeline, and we are hoping that by this Q3 all the banking activity can be restored, and we are definitely going ahead with the GML facility activated. So right now, if you are asking me, as on say mid of the November, we are hedging through GML around 20-25%.
Okay, so we have 1,500 crores of inventory. Out of that, 25% odd is through GML, correct? That's understanding.
No. Actually, now after festival, the inventory per store has been reduced, because these are my festival inventory. So post festival, the inventory right now is to the tune of 1,200 crore, out of which we are utilizing GML for around 20-25%. And aggressively we are doing the replenishment of the gold bullion, that is to the tune of 30%. So that is also considering under the hedge. But considering that replenishment as well as hedge, then we are definitely in the range of 50-55.
Understood. Got it. And sir, do we follow any hedging mechanisms on the MCX through the MCX route also, that we hedge through forward contracts?
Yeah, we have, but that is not aggressively, because considering the premium and considering the amount that is required for the particular purpose, we are right now not activated that aggressively, because we are genuinely looking for GML, because by going with the GML, then there are two benefits. One is that we can always take the benefit of hedging, and at the same time we can save the finance cost also. So that is our primary focus, that we will increase our GML portion first, and then in case required we are going ahead with MCX. That portion we have already activated, but not that aggressively as we are looking for GML.
Sure, understood. And sir, my last question is on your store expansion strategy. If you can break up the 48 stores today that we have into own stores and franchisee stores, and going forward, in which format will we add stores, and how many stores will we add?
Okay, out of 48 stores, 11 are franchisees. By franchise, I mean franchisee owned or company operated. The rest all are company owned stores. And in the phase 1, when it's spoken to be the leader in Maharashtra, all the other coming stores ahead. So another 5 stores in Q3, Q4 of this financial year. and 10 stores in the next financial year would be all company-owned, company-operated. This is the area of focus. Along the line, we may add 2-3 franchise in smaller towns if a good opportunity comes up, but that will not be the focus area. So we are looking at being around a 65-store company by the end of next financial year, being the number one player in Maharashtra in terms of number of stores, and post that the journey will move to neighboring states.
Understood. And sir, one question for Kiran sir. We had a higher other income in this quarter, so any one-off in that number?
Yeah, so now that is also a good question because we have received the income tax refund from tax authority. So that refund has an interest portion. So that portion is around 3.8 crore. So that is the reason that other income has shooted up.
Mr. Deepak, does that answer your question?
Yes, ma'am. Thank you.
Thank you. The next question is from the line of Bala Murali Krishnan from Oman Investments Advisor. Please go ahead.
Hi, good morning. So regarding the margins, everything is good, the return is good, and we have a very good pet store sales. So the margins are very low as compared to the competitors. So when we can expect the margins to reach the competitor levels, and what are the actions we are planning to reach that level?
Yeah, so typically we are working in a retail and non-retail model, wherein our focus going forward is to increase the retail portion, wherein currently we are having almost 12% as a gross margin. But when we compare retail and non-retail, then our margin is slightly go down. But when we are focusing on retail margin improvement, you will definitely going to see next 2 quarters, that is Q3 and Q4. Definitely there will be improvement in the margin, and we are in line with the competitors.
Okay, so we can expect a 7% kind of margin.
So typically we are planning to reach 10 to 12% gross margin in next 2 to 3 quarters.
Okay, and regarding hedging, so what is the current percentage of hedging we have, and what could be the, after making these changes and bullions and this gold from the banks we are going to borrow? So after that, what would be the hedging percentage?
Yeah, so currently we are doing hedging through GML is around 20% and through replenishment model around 30%. So that is around 50 to 55% we are currently doing. Our target is to reach around 70% by March 25, because as we just now inform you that we are in the restructuring with the banker. So hopefully these restructuring will complete by Q3, and its real benefit you can able to see in Q4.
Okay, and can follow up on that. So in some media interaction told that we are going to get some inventory gains because of the hike in the gold, but this is not reflected in even Q1 or Q2 numbers. So, and as asked by the previous participant, so if the hedging is 50%, so definitely we are going to take some inventory loss in the next 1 or 2 quarters if there is any correction in the prices.
No,
so
to be honest,
why there is no inventory gains?
No, that is what. So I'm coming to that. Since we are not hedged, right now we are not able to book the profit of almost 19 crore because the inventory which we are carrying in the books is at the rate of 7,700. But as compared to the mark to margin, it is 7,850. So we are following the average inventory model wherein cost or market price, whichever is lower. If I'm going ahead with the 100% hedging, then definitely my profit will be high, and 18 to 18.95 crore is the profit that I have parked for next quarter. So if I done the 100% hedging, then you will see the gross margin also affected that way. But since we have not hedged fully, only 50%, so 18.95 crore, which is for Q2, that we are able to see the profit jump in Q3.
So, but my question is that whatever the gold purchased in the maybe Q1 mid or before Q2 at the lower price, maybe you would have sold at a higher price. So there should be some gains. If you are hedging 100%, maybe there will be marginal gains. But if you are hedging 50%, so that is what was told to in the media interaction also. So we are going to see very huge inventory gains in the coming quarters. So If you are hedging very less percentage, then it is the case. So we will see the inventory gains. But even though if you are hedging 50% only, but we are not able to see any inventory gains. So going forward.
This quarter, which is Q2, there is no hedging gain for us. Means if you are saying that in your profit, what is the amount that is lying on account of hedging? So there is no hedging gain which we have observed in the Q2. In fact, we have shown the gross profit at actual. If we go ahead with the hedging, then there will be nullifying effect. But that effect of gain is all around 19 crore, which definitely going to see in Q3.
So I'm asking about inventory gain. There is no inventory gain.
I'm going to answer for inventory gain only.
Okay. Okay, fine. And regarding this store opening, so listed around September 17, and the store opening started in October 2. So we have consumed around 280 crores for the store openings as per the capex. So I think a company would have already invested a huge amount before listing for store opening, because it is not feasible to open that many stores in that 15-20 days period. So if they are already invested, then what is the purpose of utilizing these capex again for the same stores?
Yeah, you are right. So whatever, so at the time of IPO and during the roadshow also, we have clearly demonstrated we have leave and license, we have all the agreements in place, we have identified the place, we have already signed up the LOI with the landlord. So everything is in pipeline. We are only waiting for the IPO to complete, and so that fund can be utilized to infuse the inventory. So the things are very well planned in advance. It's almost a 3 months exercise to rigorously follow up everything. And for particularly each store, we are utilizing around 1.3 to 1.5 CR as a capex. So most of the capex initially like advance to landlord for 3 to 4 months rental. So these things we have already taken before the IPO when we got the NOD from SEBI and this stock exchanges.
Okay, understood. Lastly, on this Q1 numbers, so most of the competitors have posted good growth in the top line and bottom line. So, but ours is not the case. So we have a decline in the bottom line. So what is the reason for this one, and what is the reason for the margins drop in the Q1? So we have not conducted any call after Q1 release, but even though a lot of companies who came to IPO at your time, after releasing the Q1 result, they have conducted a conference call. So could you please clarify on the Q1 number?
Yes, so that is really a good question. So to be honest with you, as we discussed in the initial answer to one of the questions, that we have completed the IPO on 17th of September. So there is hardly 2 weeks to complete the quarter. Even though after completing the IPO, we are utilizing, and our keen interest is to focus on the object clause. Immediately, we cannot expect that margin will be improved overnight or kind of thing. There is some exercise which we need to do. That plan has already been established, signed off by the management, and that is now in the deployment stage. At the same time, as I mentioned, that due to reduction in the custom duty, we have seen the dip in the margin as compared to other peers, that is to the tune of 17.5 crores. So that these are the main reason wherein we saw some slight negative returns in terms of as compared to Q1 versus Q2. But definitely sale is continuously happening, because there is other side to the reduction in the custom duty, that our sale has increased by 20-25% after 22nd of July. So when we see at the one side there is reduction in the gold prices, on the other side we also observe that there is increment in the 20-25% sale as well. I think Saurabh is also want to add something.
Yeah, my question is regarding this Q1 number from the Q4 of the last year. So there is some marginal improvement in the top line, but the bottom line declined significantly. So what led to this one?
No, I think our margins are intact. Means if you're talking about March 24 or even talking about Q1, then our margins and our top line, bottom line is intact.
No, the bottom line is March 24, it's 55 crores, and when it comes to June 24, it's 35 crores. So the margins are, I think, it fell from 6%.
Yeah, so typically, this March 24 figure is a consolidation of 12 months figure. It's not only for one quarter. So definitely when we are in the beginning of the first quarter, in our industry, you will observe that first quarter and third quarter is really well. But in terms of first quarter, Gudi Padwa and Akshay Tritiya happens in the beginning. On first week of April, we are facing Gudi Padwa, and on 11th of May, we are observing this Akshay Tritiya. Post that, there is totally 45 days silent period, and during that period, we are also focusing more on IPO activity, road shows. Our more focus is on to complete the compliance part. So I totally agree that focus on business is rather than we are also doing some LOI activity, further expansion plan. So these are the things in the pipeline. But I'll ensure you that next 2 quarters you will definitely see a sharp increment in the bottom line.
Yeah, sure. Thanks a lot. All the best.
Thank you. The next question is from the line of Vikrant Kashyap from Asian Market Securities. Please go ahead.
Good afternoon and congratulations on good numbers. First, could you please highlight what is your gold sourcing mix? How much you felt 20-25% is currently GML, and what is the rest proportion comes from bullion dealers, etc. Where do you source gold from?
Yeah. So good morning. So right now we are going ahead with almost 20 to 22% through GML, and that GML facilities predominantly we are able to utilize the IPO proceeding for getting the GML. At the same time, this proportion is definitely going to increase and reach to 50 to 55%, which is currently 20%. Once we seal the bank restructuring. So there will be definitely increment in the hedging portion. And the other portion is that with respect to sourcing, currently we are procuring gold from banks as well as IIBX, and also we have few vendors who are KYC compliant and with whom we have a very strict agreements in place as a bullion supplier. But first priority is to buy the metal through GML way, and the second is by way of IIBX, that is in the GIFT City.
So can you please give me the mix right now? What is the current mix in the last quarter?
Mix in terms of what you are talking about, gold, silver and diamond?
So I'm just talking about gold sourcing. So 20% is from GML. There will be some portion from IABX, some from banks, some from bullion dealers. So how is the mix? I'm just trying to understand. What is the ratio?
So you can say that typically 50 to 60% we are buying spot by paying the upfront amount, because there is a very heavy demand for us to open the 9 stores. So inventory has to infuse in less than 20 to 25 days. So 50 to 60% of our entire gold procured spot from the vendor. Remaining we are almost 10 to 15% we are procuring from.
So to answer your question, you are saying the mix of the entire gold.
Yeah.
So like Kiran mentioned, 25% is GML, around 30% is old gold which we receive, which we recycle, and the balance 45% is what we purchase from the open market. Now this is from bullion dealers spread across Mumbai, Ahmedabad, or it's through GIFT City, IFBX.
Okay, so when you were talking about hedging inventory gain and losses, so 45% of the inventory is on direct risk of market movement in gold prices. So in the last quarter, as of now. So last quarter we must have gained in terms of inventory, but looking at the gold prices and their volatility, if you are not hedging up to the mark, so you are in a big risk when the prices fall.
No, we had also mentioned this pre-IPO that we will be hedging, we'll be moving to the industry standard of 75% to 80%. And like our CFO mentioned that currently, the non-fund based limits with banks are being processed. So the GML portion, which is currently at 20-25%, would move to close to 50%, and then 30% would be my mix of old gold. So that will ensure that we'll be around 75% to 80% hedge and in tune with the market. So this would happen in Q3.
Okay. And could you also give me the numbers of volume growth in the last quarters? You mentioned 7-8% of the volume growth during Deepavali. And what was the volume growth in the last quarter for gold in kgs and for diamond in carats?
Yeah. So if you are asking me only with respect to Q2, then Q2 as compared to last year Q2, that last year we have 1142 kg, against which current Q2 is 1360 kg. So that is 19.12% growth we are observing only gold. Silver is almost stable. That is, last year we have done the silver turnover is around 10,500 kg, and that is more or less stable this quarter also. In terms of diamond, last year Q2 we have done 3,400 carat, and this year we have done 4,400 carat. So overall there is improvement of 11% only with respect to Q2.
Okay, that's really good to see. Well, most of the competitors have not grown in volume terms, and it is good to see that our company is growing. And also,
our operations are more synced to, we are focusing on a state, going deeper in that state, and that is why we have seen our merchandising very strong, market understanding is strong, and that is why we have been able to grow consistently year over year.
And in terms of gold making, so you have your own karigars, and do you also outsource to other large players?
It's a mixture of both. So we have in-house contract karigar, and also we work with almost all the major manufacturers, right from the display players like Sky Gold, to players in Calcutta, to players in Jaipur, depending on the merchandise and depending on the need.
Okay. Sort of one question on competition. So everyone has highlighted that there's been rising competition, and there's been offering on discounts on making charges, even gold exchanges. So do you see this is a risk going forward as you are opening new stores every year? 10, 15 is the ratio run rate that you are sharing. So how will competition play into your planning?
See, we look at ourselves, we benchmark upon what we have been doing in the past. We benchmark on it. We try to understand what the market is and how uniquely we can position ourselves. So our entire premise is trust. Our entire premise is transparency, honesty, and we have as a company never focused on discounts, or we are not a discount-led company. And even going ahead, we'll be focusing on the same. So we are rightly priced, we have fair value, and we ensure that we are with customers for decades, and that has been our USP. So discounting will never be a focus area for us.
Okay. And one question, after seeing a sharp rise in gold prices, have you seen rising demand for 18 karat golds compared to 22 carats? Do you see that there is a shift?
Gold is already there in a diamond jewelry category, which is accepted pan India.
About the plain gold.
When it comes to gold jewelry, these are early days still. People are toying with it, people are experimenting, but it is not mainstream. Time will say whether it will be accepted and whether it will be ruled. But as of now, it's still a 22 carat, which is being bought and sold.
Okay. And my last question regard to lab-grown diamonds. So in the western and northern parts, we are hearing a lot of buzz about LGD, and everyone is looking at it very aggressively. So do you have any plans to foray into lab-grown diamonds through your own store, maybe different formats, or you are happy with diamond studded gold jewelry only?
We track the market. We always keep a tap on demand from our consumers, and as of now, there isn't any innate demand for us to start lab-grown diamonds or go in the category. We are seeing growth in the natural diamond space, and we are happy with that. Our customers are happy with that. So the company as of now has no plans to enter that space. But like they say, never say never. If the market demands for that, and if our consumers are demanding for that, the company can explore the option.
Okay, thank you, Saurabh. And last question on your customer base. So you have a very strong, loyal customer base. Can you show some numbers and how has they moved in last 2-3 years?
So the customer base has been growing. We track the customer base very, very minutely. We have a very strong loyalty program, and more than 2.53 million customers who are active customers in the program. So we are in constant touch with them, and they are we categorize them as per their shopping patterns, as per their longevity. So it's a program which we really work actively on, and like I mentioned before also that we believe in a lot of one-on-one communication with the customer, being in real-time touch with them, and all our branches, all our people are really employed to undertake a lot of these BTL activities. to ensure that the consumer outreach is properly done.
Okay. Thank you for answering my question. Wish you very best of luck to Saurabh and Kiran. And I have more questions. We'll like to connect you later. Thank you very much.
Sure. Thank you.
Thank you. The next question is from the line of Arpit Shah from Stallion Asset. Please go ahead.
Hello.
Yes, sir, you're audible.
Yeah, I have a couple of questions regarding the business. I just wanted to know what is the difference between the retail and the non-retail side of our revenues? Because in this quarter, I think we have reported about 2,000 crores of revenue. Now the retail sales have been around 1,200 and 1,250 crores. So what would be the difference on that? What is the non-retail side of the business?
Yeah, so that is really a good question because we are considering retail means the business we have carried out across my stores, and non-retail means my e-commerce, franchisee, then my refinery sale. So these are my sale which is not happening across the store. These we are considering as non-retail, and this portion we are going forward try to reduce, and we are more focusing on retail stores only.
Got it. So refinery you mean bullion sales? Is that the one?
Yeah. That is the old gold which we have received from the customer that we have to recycle, and we have to get it a pure gold in the format. So that is the way we are doing it, a refinery sale.
Got it. And if you can just split out the store economics, let's say for FOCO and COCO. So what kind of store economics do we have, and what kind of store sizes, what kind of sales per store, inventory per store, how the unit economics looks like, and what is the ROC per store, if you can give out between COCO and FOCO.
So start with this FOCO store, because typically we are planning to infuse around 30 to 32 crore of the inventory, and 1.5 to 1.75 is the investment that we are doing in terms of capex. When we open the new store, that company store, that store size is around 3,500 to 4,000 square feet, and initial focus is on to reach to a break even, because 1.5 stock ton is required to reach to a break even for newly opened store. So our focus is, when we open a company owned store, is to reach to a break even. Now there are two ways to look at it. If we able to open the store before our main festival like Navratri and Diwali, then we have observed based on our historical data around 12 to 15 months required to reach to a break even. And if we open the stores post Diwali, then it is taking 3 months extra, that is 15 to 18 months to reach to a break even. And once that break even has been completed, then definitely that particular store is also contributed to the bottom line. With respect to the gross margin, that my retail store is currently working with 11 to 13% as far as gross margins are concerned, and EBITDA we are working with 7%. With respect to
pre-index or post-index, sir?
Sorry, post-index.
Post-index. So what are the rentals after that?
So rental is considered in that.
So it's pre-index, right?
Yeah.
Okay.
And with respect to this franchisee operation, so franchisee they are operating with the space of around 1,500 to 2,000 square foot. So they are almost 1/3 of the company store size and company store economics. So they are carrying around 11 to 12 crores of the inventory, and they are doing some 0.5 crore or 0.75 crore on the capex part. And they are typically doing 3 to 3.5 stock turn in 20 to 24 months, and that is how they are reaching to 42 crore with the turnover. And they are also getting around 5 to 6% EBITDA. So that is how the franchisee is doing. And they are, the first franchisee we have started in 2018, so almost it's like 5 to 6 years. So all rate gain is also with the franchisee, all expenses bear by the franchisee. Only branch manager is on our payroll, so entire remaining cost is bear by the franchisee owner. There is no fixed commitment that company is giving to them as other competitor or few of the competitors are working. We are not working on that model, so it's purely a plain business. Whatever material we are transferring to these franchisee, that is considered as pure cash sale for us. We are doing the entire business in advance. So all the marketing is done by the company for the franchisee. We are also we are So the franchisee is getting around 8 to 9% as far as the returns are concerned, and plus the rate gain is also lying with the franchisee. So roughly 15 to 16% they are earning with us.
89% is what? Sorry.
15 to 18% they are earning with us.
That would be their ROC, right? 15 to 18%.
Yeah. That is how the amount they have invested. So to be honest with you, franchisees, they have their own source of funds, then they can save on finance card. They have their own premises, then they can save on rental. So slightly 2 to 4% deviation here and there, but around in that range only all franchisees are earning with us.
And what kind of gross margins we make after selling it to franchisees?
So it is around 2 to 3% we are getting. So there are two ways to look at it. One is with respect to gross margin, and other is that we are also charging some royalty and management recovery also from them. So 0.5% by that way. So 3% is the amount that we are getting from the franchise operation.
So 2 to 3% is gross margin, 0.5% is royalty from the franchise part.
Yeah, so totality it is coming to 3% gross margin.
Okay, so what kind of ROCs do we do on the cocoa business model, let's say after 2 years or 3 years?
You're talking about cocoa?
Yeah, cocoa.
So cocoa, if you're asking me, then pre-IPO we are in the range of 28%. Now post-IPO, since we have offered shares, so I think the ROC and ROE ratios are a little bit hampered. But definitely in next 2 to 3 quarters, once the business is settled and profitability is also settled, then definitely it will again reach to that level.
So on the peak inventory, on the peak sales, you will be doing about 5x inventory, right? So that is about 150 crore sales. On that 150 crore sales, you will be making let's say a margin of 12%. So that would be around 18 crores. And you will be making an EBITDA margin of let's say 7%. So about 10 crores would be the EBITDA. Your capex would be around 35 crores, which is inventory plus this. So 11.
Capex is not 35 crores. Capex is only 1.5 to 1.75 crores.
Yeah, I mean capex meaning the building cost plus inventory. I mean that. So that's around 35 crores, including the capex cost and everything. So you'll be making about 10 crores on 35 crore kind of investment over a 2-year, 3-year period. Once the store is matured, that's how we start making. How will the sales look like? Let's say in year 1, year 2, year 3.
You are talking about sale?
Yes, sales.
Yeah, so sale, if you are asking me H1 versus H1, last year H1 versus this year H1, then there is a growth of almost 33%. And
no. I mean on a new store. Let's say if you open a new store, what will be the year 1 sale, year 2 sale, and the year 3 sale?
So you are talking about the recent store which you have opened?
No, in the past, let's say if you would have opened stores, how the unit economics would have looked. Let's say you would have opened a store, let's say in 2021 or 2020. What would be the year 1 sales? What would be the year 2? How would the maturity be reached once the store is hitting 5x inventory?
Yeah. Typically 2 to 2.5 years, that store will get matured in terms of they're reaching to a stock turn of in the range of 3.5 to 4.5.
Okay, that is in 2.5 years. And
when 30 months is the period which we consider as a period for getting it matured, because by that time my employees settle there, they understand the surroundings, they understand the competitors, they can have many BTL, ATL activities wherein they connect with the customer. At the same time, we are also doing a pitching in terms of marketing aggressively. There are some events, there are some Mahotsav, there are new collection launch. We can also understand the nerve of the people who's staying nearby. So around 30 to 35 months, the store will get matured, and by saying matured, it will reach to a stock turn of 3.5 to 4.5.
Got it. And how should we look at the growth, let's say in FY25 and FY26? Because this quarter, I think, so we've grown about 47%, driven by gold prices as well as volume growth for us. So how should we look, let's say FY25 and FY26? What kind of revenue growth are we targeting?
So with respect to, just hold on. So I'm just opening it.
Thank you. The next
Yeah. With respect to the top line, we are targeting around 8,000 crore for March 25 and around 9,500 crore for March 26.
Thank you. The next question is from the line of Dinesh from Finsight Ventures. Please go ahead.
Hello, sir. Can you hear me? Am I audible?
Yes, sir.
Okay, sir. First of all, thank you for taking my questions and really congratulations on a really great set of numbers. So my question is, see, I stay in Chinswad, so I see quite a few jewelry stores nearby around. I happen to visit mostly the PN Sons there because that's the nearest one to my house. My question to you, sir, how do you differentiate between PN Gadgil and PNG Jewelers and PN Sons there? It's very, because I've been a frequent buyer of gold here and now and then every few years. I really don't see any differentiation between the two franchises. I mean, they look very similar. How as a customer I should differentiate? That I'm sure this is across most of the buyers in Maharashtra. I hope you get my question.
I'll answer a question. So this, I think, it has been handled very long ago. Today, buyers are very much aware, primarily because PNG as a brand is only used by us in all the communication. The other side only says PN Gadgil and Sons. So the PNG logo, the PNG brand lies with us. Otherwise, we are very, very differentiated. And the biggest differentiator is in the customer relationship, in design, in the store layout experience. So there's been enough and more awareness activities done. And today, I think when you talk to customer at large, there is no confusion. Somebody may choose to go to his choice because of the convenience and distance. But beyond that, there is no other point which will really confuse the customer. Having said that, there has been no growth from their side for the last 4-5 years. We are a fast-growing company, and we are there in all the relevant pockets for the city. So I don't see this as being a challenge for us even now or in the future also.
Okay, so are you seeing any competition among the two branches or the two groups? I mean, like in terms of cannibalization of stores?
We don't track them separately. We look at them as any other competition, and we always strive to benchmark and be better than the competition. So that is how we look at them.
Okay, sir, another question on the similar lines. Like I see, I think Tanishq has somewhere around 65 to 70 stores in Maharashtra. So, and you are saying that we will be the number one store in next maybe 2 years. So can we expect our...
Hello? Hello?
Mr. Dinesh? Due to no response from the current participant, we will move on to the next participant. The next question is from the line of Sanjaya from Ampersand Capital. Please go ahead.
Yeah, hi sir. Thanks a lot for the opportunity, and you have already explained most of the things. I just wanted to reconfirm that you are looking at your gross margin to expand to some 11-12% over next 1 or 2 quarters. Is that correct, sir?
Yes, correct.
And is it because of some that inventory loss which you had provided for in quarter that will reverse, or what exactly it is?
No, there is no loss or anything as such, but as we are planning to increase the studded portion, we are working on aggressively to increase the jewelry sale, as we have added 9 new stores also in our total store count. So that is definitely going to increase the stock turns as well. So having said that, this collective effort on terms of sale, at the same time we are planning to reduce the finance cost, because earlier we have a cost of debt is around 9%, which we are planning to reduce to 5 to 5.5% by going ahead with the gold metal loan. And at the same time, when we are procuring gold from IIBX, then there is reduction of almost 0.7 to 0.8% on the total procurement cost. Also, we have started already negotiating with the exist Karagirs to reduce the making charges also. So having said that, collective efforts from all these segments will definitely improve my gross margin by you can say that next 1 or 1 to 2%.
Thank you. Ladies and gentlemen, due to time constraint, we will take that as the last question. I would now like to hand the conference over to Mr. Naveen Trivedi from Motilal Oswal Financial Services for closing comments.
Yeah, thank you everyone for participating in the conference call. Thank you Saurabh and Kiran for sharing the insightful session. Any closing comment from Saurabh?
So I think, Naveen, thank you for organizing this. Thank you for all the participants for showing interest and being here in the conference and asking questions. If you need any further information, the management is more than happy to answer your queries. And this was a great experience for us, being the first conference, post listing. It was a wonderful experience. I hope we were able to answer questions. But surely, if you have any further questions, any further clarification, the company is more than happy to answer them. Thank you once again, everybody.
On behalf of Motilal Oswal Financial Services, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.